Hello and welcome to part 2 of the topic Basics of Accounting. Now, in the last session, we have covered some relevant concepts. We covered the concept of layers of accounting. We covered the process of accounting. We looked at the concept of meaning of accounting and also the end users of the accounting information. In today's session, we are going to learn 2+1 important aspects that is pertaining to accounting subject. Now, which are the areas that we are going to touch upon in this particular session? We have spokes of the wheel of accounting. Then we will play some accounting equation games. And then we are going to touch upon two very important terms in accounting. So this is what we are going to cover in today's session. So spokes of the wheel of accounting, accounting equation games, and important terms in accounting. We'll touch only upon two very important terms in accounting. Now, as you see on the screen, when I say spokes of accounting, immediately the word spokes, as we all understand, is connected to the rim of a tire, maybe a cycle, maybe an auto, maybe a two-wheeler, or maybe a four-wheeler for that matter. And how we have in the English language, we say 26 letters, we say, of the English alphabet. In accounting, we have only 5. So when I say, if I can call the matter, this entire structure that you see on my right, on the right of your screen, if this is called as accounting, then accounting has 5 spokes. Which are those? First one is assets. Second is liabilities. Third is capital or equity. Then we have expenses followed by incomes. Now, these are the 5 things that makes up for the entire subject matter of accounts. You take any item for that matter. You think of a land and building. You think of salary. You think of an income received. You think of a liability. You think of capital. Anything and everything that we study under the sky of this subject called accounts is covered under these 5 spokes. So a clear understanding of these 5 aspects of accounting will definitely help you in understanding the subject very, very well. Now, though I say the subject topic is basics of accounting, I would rather say this is more focusing on the fundas, the fundamentals of that particular subject. And if the foundation of the subject is very, very strong, you can build as many floors as possible when it comes to your structure. So these 5 aspects, as you see on your screen, are the core of the subject matter of accounting. So as I said earlier, anything and everything that you imagine in the subject of accounts can be brought under these 5 terms. So let's understand each of these terms very, very clearly. First, let's look at the concept of assets. What do you mean by an asset? Why does a business need an asset? Some important points. Resources controlled by an enterprise is known as an asset. I have complete control over, let's say, the land and building that I own. I have complete control over plant and machinery. I have complete control over furniture, fixtures, fittings. I have complete control over the motor vehicles. I have complete control over the intangible assets that I own in the business. So resources which are controlled by an enterprise is known as an asset. Now, why do we need an asset? See, the basic objective of holding an asset is to earn revenue for the business. Let's take, for example, machinery. You are going to use machinery in the factory and you are going to produce goods, finished products. The raw material will undergo a process through the help of machines and it will be converted into finished products. And such finished products will be sold in the market. So when the business is selling that finished product, it is going to generate revenue. And it is the assets which are going to help the business earn revenue. Not only this, assets also go in the long run, helping a business in its growth as well as expansion. So let's look at a few examples of assets. Land and building, you can take factory building, you can take office building, or you can take a vacant land which the business owns. And this vacant land, very soon we are going to construct our office building, or we are going to construct a factory building there. Then we have plant and machinery. Plant basically means a place where machines are kept. And machinery, as we know, the technical and the technology aspects that we need as far as production of goods are concerned. Then we have furnitures, fixtures, and fittings. So furnitures can be used by the business inside the factory, inside the office, in the boardroom, in the conference room. So you can find tables, furnitures, chairs, laptops, computers, desktops. You see lighting, air conditioner, tube lights, everything comes under the category. Switch boxes, switchboards, all these comes under the category of furnitures, fixtures, and fittings. And also we have assets as motor vehicles, vehicles which are used for delivery, to the buyer's place, or vehicles which are there inside the factory, for taking the raw materials from one place of production to another place of production inside the factory. So these are a few examples of assets. Definitely, this list is not a complete list. You have many more assets, of other kind which will be used in the business as far as, for the smooth running of the business is concerned. The second spoke that we have in accounting is called as liabilities. What do you mean by a liability? Liability is nothing but an obligation of a business towards an outsider. Let's imagine business has borrowed a loan from the bank. Business has borrowed a loan from the bank. Why is the business borrowing loan is the basic question. Business may borrow loan for expansion of the business. Business may borrow a loan for purchasing an asset. Business may borrow a loan for any other business purpose, the immediate requirements. Now, once the loan is borrowed, it becomes an obligation of the business, the duty of the business to repay such loan to the bank in installments, in lump sum, as agreed between the business and the bank. Now, when you are repaying the loan, when you are settling your liabilities, what will happen? Either you will reduce your asset value. Asset value may go down because when you are going to repay, your bank balance is going to decrease. So reduce an existing liability. Obviously, bank loan is going to come down when you reduce, or you are going to take a fresh loan to reduce, settle an old loan. So settling liabilities may either reduce an existing liability or create new liabilities. And remember, loan is a very, very important aspect for any business, and it is very much required for the furtherance of business. We talk about zero debt companies, but I can tell you, those companies which are zero debt companies, they offer less wealth to their shareholders. They offer less wealth to their shareholders. So company which has borrowed, whose capital structure is that of a mix of debt and equity. Debt means the borrowings, equity means the ownership funds. So put together, such capital structure will give more benefit or create more wealth for its shareholders. Whereas a company which is a zero debt company will create less wealth to its shareholders. So in the course of the subject, you will understand the, the statement that I made just now. So bank loan, business loan, loan borrowed from any other authority for the furtherance of business. So definitely loan is very much a part of the business. The third important spokes that we are talking about of the business is equity, also called as capital. Now, what do you mean by capital? What do you mean by equity? It is nothing but ownership funds. How much of amount an owner has contributed in his or her business. It is also referred to as net worth of the business. Basic rule of equity is total assets in a business minus outsiders' liabilities. That will give you equity. And that's why that is the formula for net worth. So it is also referred to as owner's capital plus accumulated profits or minus accumulated losses. So if there is accumulated profits or undistributed profits in the financial statements of the business, then such accumulated profits is added to the capital of the business person. And if there is accumulated losses, then such accumulated losses will be deducted from the owner's capital. So as I said earlier, capital or equity is also referred to as net worth. The simple formula for net worth is total assets in the business minus outsiders' liabilities. That is called as net worth. Now we are coming to something very, very important in the subject of accounting, and that is accounting equation. So I'll just give you an idea what is accounting equation. As a part of our discussion in today's session, we are going to play some games on this accounting equation as well. So simple accounting equation is equity plus liabilities is equal to assets. And the beauty of this equation is no matter what happens in a business, this statement will always hold good. This statement will always hold good. If I go back, I said the formula for net worth is total assets of the business minus outsiders' liabilities. So if I interchange the formula, equity is equal to, I take plus liabilities, I take it to the right side, it becomes minus liabilities. So equity will be total assets minus outsiders' liabilities. So this is the accounting equation. More about this accounting equation we will discuss in few minutes. Let's move to the fourth spoke that we have in the subject accounts, and that is expenses. Can I imagine a business without expenses? It is not possible for a business to survive without spending, without expenses. Though the meaning of expenses says it is a decrease in the economic benefit of an enterprise. But one very, very important point that we have to note, and that is whenever we incur an expense, it is always in anticipation of benefits for the business. So when the business is spending, business is expecting a benefit or business has received a benefit. Let's take example, salary. To whom do we pay salary? We pay salaries to our employees. Are they giving something in return? Definitely yes. They are giving their service to the organization. Let's take, for example, rent. Rent. To whom do you pay rent? You pay rent to the landlord. Why are you paying rent? Because you are using the property of the landlord. Next, we talk about insurance. Why do you pay insurance to the insurance company? Because the company gives me security, gives my business the protection. If in case something goes wrong in the business, if the business catches fire, if there is a natural calamity, and if my insurance covers that particular aspect, then definitely insurance company is going to give us compensation. So whenever the business is spending, business always anticipates benefit. Remember, there cannot be an expense without a benefit, and always you will have a benefit out of the expenses that the business is going to incur. Now the concept of expenses is further classified into expenses and losses. It is further classified into expenses and losses. So to the right of your screen, what do you mean by an expense? Expenses are referred to as spending, usually incurred in the ordinary course of business activities. When you are carrying out the day-to-day activities of the business, definitely the business has to spend. There are certain examples given there. Business spends on salary, business spends on wages, business spends on rent, business spends on insurance, business spends on office related expenses, business spends on audit fees, and a lot of other expenses that are connected to the business. So all these are treated as expense in the business, or more so you can assume amount spent for day-to-day running of the business is called as an expense. And this is the list that you have. If we look at the left side of the screen, we have losses. What do you mean by losses? It may or may not arise in the course of ordinary activities. It is not compulsory that losses has to happen. But if losses happen, that is also a part of the business. Those are which are incidental to the business, connected to the business. For example, bad debt. What do you mean by bad debt? A certain customer whose debt is long due, from whom the business has to receive money, doesn't pay the money or has disappeared, is not to be seen at all. So after a certain period of time, usually we say 6 months, such a debt due from a customer who has not paid will be treated as a bad debt. In banking terminology, such bad debts are referred to as NPAs, non-performing assets. But from a regular business point of view, we treat such debts as bad debts. So bad debts is one. Next, suppose we have loss of goods in transit, the vehicle which is getting the raw material or say delivering the finished product, say from our factory to the buyer's place. Such a vehicle meets with an accident. Or if there is a kind of pilferage would mean leakage, especially in case of liquid goods. Or if there is damage while in transportation. So such damages, such pilferages are considered as losses in the business. If the business catches fire, there will be loss due to fire. All these are included in the meaning of losses. So we need to understand very clearly the difference between an expense and a loss. So both expense and loss are a part of the general heading called expenses. But for in-depth understanding, we differentiate between the term expense as well as losses. The final spoke that we have in the subject matter of accounts, and that is income. So how expenses was, outflow of benefit from an enterprise in anticipation of certain benefit to the business. Income is flow of benefit to an enterprise arising out of resources controlled by it. Best example I gave earlier. Plant and machinery is used in converting raw material into finished product. And when this finished product finds market, it is sold. And as a result of sale, income is generated. So that's why it is called as flow of benefit to an enterprise out of resources controlled by it. So we say increase in economic benefit. There is inflow of resources. There is inflow of cash, you can say, if it is cash sale. Inflow of economic benefit for an enterprise and fulfillment of the objective of the business. One of the basic economic objective that the business has to earn profits. So when the business is producing and selling, definitely the business is going to earn profits. And profit forms the focal point of any business. Apart from the economic objectives, there are many other objectives. Say social objective, providing employment. Say human objective, giving fair wages to its employees. So likewise, objectives of a business can be classified into many categories. But when we focus on economic benefit, the preferred economic benefit is profit. So when the business is earning an income, that means it is an outcome of sales made by the business. How expenses were classified into expenses and losses. Similarly, incomes are classified into revenue and gains. So what do you mean by a revenue? What do you mean by a gain? Simple example. You are selling goods. This is the main activity of the business. Main activity of the business. So when an income is derived as a result of practicing or fulfilling the main activity or in the ordinary course of activities of the business, such an income is treated as revenue. For example, income out of sales. If the business is into commission business, agency business, commission received will be treated as revenue. So sales is an example of revenue. So income earned in the ordinary course of the business. But if we look to the left side, there is another classification of income called gains. Now, what do you mean by a gain? This is incidental to the ordinary activity of the business, not the main activity of the business. If I go back to the list of losses, we understood the concept of bad debts. A certain customer doesn't pay. So his debt is treated as a bad debt. Now, if the same bad debt is recovered in this year, suppose it was treated as bad debt in the last year, and if the same bad debt is recovered in the current year, it's an income, and that income goes under the category of gains because it is not directly connected to the business. It is only incidental to the business. So bad debts recovered. And also these gains may arise or may not arise. Just like how we had the concept of losses. Interest received I have included in the list of gains. What is this interest received? As a business, I'm opening an account in a bank. I deposit money in a bank. And on that bank balance, let's say a savings bank account, bank is giving me interest. Bank is giving me interest. So business is receiving or earning interest. Point to note, interest received is not the main activity of the business. It is an activity which is only incidental to the business. Because business has received money, just to provide kind of security to the money, business is depositing that money in the bank, and bank is giving timely interest, maybe half yearly or annual interest. So that interest received is not the main part of the business, but it is only incidental or connected to our business. That's why interest received from bank deposits is included in the meaning of gains. So how expenses were classified into expenses and losses? Similarly, incomes are classified into revenues and gains. So these are the 5 spokes that we have in accounting. Let's refresh again. We have assets, resources controlled by an enterprise, which will help the business do well, grow, expand. Second is liabilities, borrowings of the business, obligations of the business towards an outsider, for which the business has to repay. So bank loan or company raising money through the issue of debentures can be taken as a liability. The third was equity or capital, also known as net worth. So it is the equity balance, the capital balance plus accumulated profits, or capital balance minus accumulated losses. So it is also treated as net worth. Then the fourth, we had expenses, classified into expenses and losses. And the fifth, which is there on the screen, is income, which is classified into revenues and gains. Let's move to the second part of our today's presentation, and that is accounting equation. So as discussed earlier, equity plus liabilities is equal to assets. And I mentioned as well, at any given point of time, this particular statement will always hold good. It will always hold good. We will check. I have taken 6 cases over here. For each of the transaction, we will understand how there is a change in equity, assets, and liabilities. Let's take the first transaction. Case 1, I say, Veena started business with cash rupees 30,000. So the business person is starting a business and she is bringing in cash worth rupees 30,000. What will happen to the accounting equation? I record accounting equation, equity plus liabilities is equal to assets. And we see over here, Veena is bringing in money. So definitely that is Veena's capital. An increase in equity. See, capital value increases by 30,000 rupees. No change in liability. Liability remains 0. And there is cash balance, which is an asset to the business worth 30,000. So as I said earlier, this equation will always hold good. You take any number of transactions. After every transaction, you will find this equation holding good. Now, what is the application of this? When Veena brought in capital for her business, there was increase in equity. And increase in equity will result in increase in the value of an asset. So you can check over here, 30,000 capital increases, equity increases. And on the right hand side, you see asset value 30,000, cash balance also increases. And we will continue with the same numbers for all our upcoming cases. Let's look at the second case. Business is purchasing machinery. So when business is purchasing machinery, there is no change in the capital balance. Capital will not change. Liability value, again, there is no change. It will remain 0. But since the business is purchasing machinery, out of 30,000 rupees, business is spending 12,000 rupees, the cost of the machine. So business is spending 12,000 rupees, the cost of the machine. So cash balance will come down to 18,000 and machinery value will increase by 12,000 rupees. So you can check no change in capital, no change in liability. It remains as 30,000 and 0 itself, as you had in the previous case, is equal to, now this cash balance of 30,000 is used to purchase machinery worth 12,000 rupees. So your cash balance will come down by 12,000 rupees and it will come to 18,000. And again, machinery which was not existing in business, its value now is 12,000 rupees because we have purchased. So what has happened? See, asset has been purchased. Machinery is an asset. We saw that in the meaning of an asset, example of an asset. So increase in one asset will result in decrease in the value of another asset. See, over here, there was no machinery at all in the first sentence, in the first application year. But in the second one, you have machinery worth 12,000 rupees. So there is increase in the value of an asset. But at the same time, cash balance, which was 30,000, has now decreased by 12,000 rupees because we have paid for machinery. So cash balance come down to 18,000. So there is decrease in the value of another asset. So the application of this particular rule is increase in the value of one asset will lead to decrease in the value of another asset. Let's remember these numbers. 30,000 plus 0 is equal to 18,000 plus 12,000 because we are going to use it in our third case as well. So let's understand the third case now. Case 3, purchase furniture from Lancy Limited on credit. So we are purchasing from a business on credit. That means we are not paying money. When we are not paying money, capital balance does not change. It remains 30,000 only. But now we have to pay 14,000 to Lancy Limited and they become our vendors. I have recorded as creditors over here because creditors are basically people from whom we purchase raw materials or goods on credit. Vendors are people from whom we purchase assets on credit. So instead of creditors, you can assume these as vendors, Lancy Limited as vendors. So 14,000 worth liability has increased. We have to pay money. So 14,000 is equal to, since we have purchased on credit, there is no change in cash balance. Cash balance will remain 18,000 itself. No change in machinery balance. It will remain 12,000 itself. But now furniture is purchased. So definitely furniture value, increases by 14,000. So you can total this. 18 plus 12 is 30 plus 14 is 44,000. And on the left hand side also 30,000 plus 14,000 is 44,000. So that equation, equity plus liabilities is equal to assets, as I said, will always hold good. So what is the application of this? When you are purchasing furniture, you are purchasing an asset. So when increase in the value of an asset, and this is done on credit, will result in increase in the value of a liability. So you can check asset furniture value increases by 14,000 and there is now a payment which is due to Lancy Limited, 14,000, which appears as a liability right here. So this is about the case 3. Let's move to case 4 now. Let's imagine we are borrowing a loan from the bank worth 20,000 rupees. So a loan is borrowed. So what will happen? When a loan is borrowed, definitely there is no change in capital balance. 14,000 which is due to Lancy Limited will remain due. Plus now we have a liability worth 20,000 which will be bank loan. That is on the left hand side. And when we are borrowing loan, definitely our cash balance is going to increase. So 20,000 plus 18. So the cash balance, cash and bank balance will increase to 38,000. Then we have 12,000 worth machinery and 14,000 worth furniture. So this is what I said just now. 30,000 is the capital value, no change. 14,000 is this amount due to Lancy Limited. 20,000 is the loan that we just borrowed from the bank is equal to, earlier the cash balance was 18,000. Now since you have borrowed a loan from the bank, so 18,000 plus 20,000. So cash and bank balance will increase to 38,000. No change in machinery, it will remain 12,000 itself. And furniture value also, there is no change for 14,000. We have borrowed a loan. That means increase in the value of a liability will result in increase in the value of an asset. So when you are borrowing a loan worth 20,000 rupees, cash and bank balance also increases by an equal amount. So if we total, the left hand side is 30, 44, 64,000. On the right hand side, we have 30, 40, 50, 60 and 4,000. So 64,000 on both left hand side and right hand side. Let's remember these numbers. 30 plus 14,000 plus 20,000 is equal to 38 plus 12 plus 14. Let's remember the numbers for our next case. Let's move to the fifth case now. Out of 20,000 loan that we borrowed, we are now repaying 18,000 worth loan. That means 2,000 worth loan will remain in the business. So 30,000, no change in capital balance, equity balance, no change in the amount due to Lancy Limited, which is 14,000. And earlier the bank loan was around 20,000. And now the bank loan is only 2,000 because 18,000 worth loan we have repaid. So this is 2,000 loan amount. Similarly, bank balance, cash and bank balance, which was 38,000. Business is paying 18,000 worth loan in cash or bank balance through check or online, any mode for that matter. So from 38,000, we deduct 18,000 and we get 20,000 cash balance. This 12,000 is the value of machinery. This 14,000 is the value of furniture. Now, since we have repaid loan, that means application would be decrease in the value of a liability will result in decrease in the value of an asset. So when the loan amount decreases, so also the asset cash and bank balance value will also decrease. So this is about the fifth case that we have and its application. Let's look at the sixth and very, very important aspect, the final case that we have as far as our accounting equation game is concerned. Business is purchasing goods worth rupees 9,000 and sold the same for rupees 15,000. So first we will understand this particular statement. Goods worth rupees 9,000 were purchased and the business has sold the entire amount for 15,000. Remember, the cost is 9,000 and the sales or selling price is 15,000. So selling price minus the cost price, which is 6,000 rupees. 15,000 minus 9,000 is 6,000. That is profit for the business. What will you do with the profit? Remember, this profit will be added to the capital of the business person. It will be added to the equity. So earlier we had 30,000. Now it will now become 36,000. So remember, 36,000 will be the equity amount. 6,000 profit will be added to equity. Then 14,000 is the creditor's amount which is due. Loan amount remains unchanged, 2,000. Earlier the cash balance was 20,000, and since there is a profit is going to increase your cash and bank balance by 6,000. So it will now become 26,000, provided these goods are sold on cash. If it is sold on credit, then we will have another asset by the name debtors here worth 6,000 rupees. Remember this. So say we are assuming that the amount is paid in cash, so that net profit of 6,000 rupees in this particular transaction, 15 minus 6, will be added to cash balance, and cash balance will increase to 26,000. No change in machinery value, no change in furniture value. Now, what is the application? Remember, this is revenue. Revenue is 15,000. Expenses is 9,000. And revenue minus expenses gives you profit. And remember that the net revenue that we are talking about, the net revenue, that is revenue minus expenses. The net revenue that we get is going to increase the equity also. Earlier it was 30,000. Now it is added, it will become 36,000. And at the same time, it also increases the asset value as well, which was 20,000 earlier. Now it becomes 26,000. So this is about the accounting equation game. So we have had different situations that we had taken. We had taken the first application, increase in the value of equity will result in increase in the value of an asset. The second case was increase in the value of an asset will result in decrease in the value of another asset. The third one that we took was increase in the value of an asset will result in increase in the value of a liability. The fourth one that we have taken, increase in the value of a liability will result in increase in the value of an asset. The fifth that we had taken was a decrease in the value of a liability will result in decrease in the value of an asset. And finally, we talk about net revenue. Net revenue is nothing but revenue minus expenses, or in common language, we call it as profit. And that revenue, increase in the value of revenue, will increase both equity as well as asset. So I hope this concept of accounting equation games is clear. And I will be reminding you of this particular concept when I come and discuss the concept on double entry system of bookkeeping, which is coming up in the upcoming sessions. So I hope this accounting equation games is clear. Now, we move to the last part of our discussion in this session. that is important terms in accounting. Point to note, in this particular session, we are going to touch upon only two terms in accounting. If I go back to my previous session, I had mentioned about the process of accounting. And the starting of the process of accounting is transaction or an event. What do you mean by a transaction? And what do you mean by an event? So I will be giving a number of examples on these two. These are the only two terms that I'm covering in this particular session. Let's look at the first one. What do you mean by a transaction? Any business dealing, I stress business dealing, which involves a transfer of money or money's worth is known as a business transaction. So when there is an exchange between two parties, point to note, one party is always our business. One party is always our business. And our business is dealing with an outsider. So there are two parties involved. Our business can either be a buyer or we can be seller. It can be any case. Now, in between these two parties, if there is a transfer of money or money's worth, such a dealing between those two parties is called as a transaction, and it is called as a business transaction. Remember this. So when there is an exchange or transfer of money or money's worth, such a transaction is called as business transaction. If you go back to all the 6 cases that we had taken, Veena brought 30,000 cash into her business. She purchased machinery. She took a bank loan. She purchased furniture on credit from Lancy Limited. And likewise, all those 6 cases are examples of transactions for your information. But let's take a very concrete example of a transaction in this particular session at this point of time. You go to a shop to buy a pen worth rupees 10. So you are going to a shop to buy a pen worth rupees 10. Now, what kind of exchange will happen? You are going to give 10 rupees to the shopkeeper, whereas the shopkeeper is going to give you that pen. Shopkeeper giving you that pen represent money's worth. That pen which you have in your hand right now is an example of money's worth. Whereas you are going to give 10 rupees to that particular shopkeeper, and that 10 rupees definitely is money. So when in a business there is an exchange of money or money's worth, such a statement or such a transaction is called as a business transaction. And remember, all business transactions are to be compulsorily shown in the books of accounts. So that is about transaction. We will take few more examples in the next slide. Let's move to the second concept that we have, and that is an event. Again, I go back to the process of accounting. Process of accounting begins with the happening of a transaction or an event. We have seen what is a transaction, exchange of money or money's worth. What is an event? Event is nothing but happenings in a business. Business doesn't pay any money for it, but an incident happens, but it has monetary effect. It has a monetary impact on the business, and therefore very much a part of accounting. So these are happenings in a business which has monetary effect, and therefore, like transaction, events also form a very, very important part of the subject of accounting. Now, let's take examples of transactions as well as events. So on the left side, you will find examples of transactions. Started business with cash, rupees 80,000. Purchased machinery, 25,000. So these are the statements more or less of the first 2 cases that we have taken. Purchase goods worth rupees 20,000. So business is purchasing, giving 20,000 rupees and purchasing goods. Sold goods worth rupees 35,000. So business is selling, worth 35,000. So 35,000 worth goods are going out, cash is coming into the business. Business is paying rent and salaries. Rent is paid to landlord, salary is paid to employees, 5,000 and 12,000 respectively. But business has received the services of its employees. Business has use the opportunity of making use of the property where the business's office or factory is situated. Then business may receive commission for the services that business has rendered. Business may borrow a loan from the bank. So business is borrowing a loan, money's worth is coming in, at the same time liability comes into the picture. Then I have a statement marked in red over here, which I will discuss at the end. If you see on both the sides, you have this transaction. It's a similar transaction. I will talk about it. Let's talk about examples of event. I said event refers to happenings in a business. Business doesn't pay for it. Goods are destroyed by fire, but due to some reason, the business catches fire. That is an event. How? In a house, wedding is an event. Birth is an event. Death is an event. Remember this. So, similarly, in a business, event would mean if the goods are destroyed by fire or by any natural calamity, or if there is a theft for that matter. See, loss due to theft also we have in the list of events right here. Then we have stock of goods which remains unsold at the end of the year, lying unsold at the end of the year, which is called as closing stock. So closing stock is an example of an event, very much recorded in the books. See, wages are outstanding. Business is yet to pay wages to its temporary workers worth 750 rupees. Bad debts from a customer X. So when you're selling goods to customer X, Mr. X doesn't say that my debt is a bad debt. Over a period of time, when Mr. X is not able to repay his debts, we treat such debts as bad debts. And bad debt is a beautiful example of an event in a business. Then loss due to theft, we have already seen that. Then we make a provision for doubtful debts at 10% on debtors. So making a provision, creating a reserve on profits and transferring to reserve fund. All these are examples because provisions and reserves are always made out of profits. All these are examples of events in a business. Then depreciation on machinery is 12,000 given. Depreciation can be on any asset, not necessarily on machinery alone. It can be on land and buildings. Remember, there is no depreciation on exclusive land. Land is an undepreciable asset. Land cannot be depreciated exclusively. But if you have land and building, it is a depreciable asset. So depreciation on land and building, depreciation on machinery, depreciation on furniture, fixtures, fitting, depreciation on motor car. All these are taken as events that we come across at the end of the year. Now coming on to the last sentence, which is common on both sides, transaction as well as an event. It is placed rightfully. Whenever the business is purchasing an asset on the last day of the year, and the business is not able to put that asset to use, there is no question of depreciation, but the asset value is going to increase. The asset value is going to increase. Or if it was purchased on the last day and depreciation was charged, then you can also include it in the list of depreciation. Now, purchased an asset on the last day of the year is a classic example of a statement which is both a transaction as well as an event. Why? Because when you are purchasing an asset, you are paying money. So that is basically a transaction. And there, if that asset is used on the last day of the year, there comes depreciation as well, which we have taken just above it. I have written, you have taken that as an, an event. Depreciation on machinery as it is shown right here. Remember this. So purchase of an asset on the last day of the year is a classic example of a statement which is both a transaction as well as an event. So this is about the concept of event. So that's all we have as far as this particular session is concerned. So if you have any queries, you can feel free to connect with me either through my mail or through my mobile number. So thank you very much for your company, and just you can put in the comment box as to how did you like the video, and I'm open to criticism as well. So thank you very much for your presence and your patient hearing. Thank you once again.